Good morning, everybody. Welcome. We're just going to do what we normally do on these webinars, just give everybody kind of 30 seconds or so to find their way into the room. Whilst we do that, just pop something in the chat box, let us know that you can see us and you can hear me at the moment. You'll hear more from Paul and Katie shortly, but just let us know that you can hear us and everything's working okay. And hope the sun's shining where you are. It's very pleasant here in Norfolk at the moment. Just going to get some slides ready for us to go. And as I always say on these things, I get nervous until I see something come in the chat box, but it's there now. So hi everybody. Thanks for joining us. Right, that's the 30 seconds. That's good. We will get underway. So welcome. Thanks for taking the time out of your calendars to join us for what I'm sure is going to be a really valuable and insightful session this morning. We are going to talk about MTD for IT. Lots of different ways that people have been presenting MTD for IT. It was MTD for ITSA and MTD for income tax. But Paul assures me that the HMRC line is that it's MTD for IT. It's not MTD for it or anything else. You're going to hear a lot about MTD over the next 6 to 12 months, certainly, and I'm sure beyond that as well. And hopefully from today's session, you'll see why you're going to hear a lot about MTD for IT over the coming months. So what we hope that we're going to be able to deliver today is basically some insight in terms of what's underpinning this, what the requirements are, and really the things that you need to be thinking about right now. And I think that's the key point that I hope comes out of the session today, that this isn't something that we can leave until February next year when we've done another self-assessment round. So lots of practical insights, lots of tools, lots of pointers in terms of the things that you should be thinking about. So that's the plan. We've got this scheduled for an hour. Do pop your questions into the Q&A box as we go through. I'll keep an eye on those and we'll pick up questions probably for Paul and Katie more so than me as we go through this. Any general comments, observations, pop those in the chat box. Let's make it as interactive as we can. Clearly, that's going to make sure we hit the right points for everybody. So that is the plan. Let's do introductions first of all. Those that don't know me, I'm Will Farnell. I wear a number of hats. First and foremost, I run an accounting firm, but I'm also a co-founder at App Advisory Plus, and we're delighted to have you on one of our webinars today. And I'm joined by Paul and Katie from Dext. So Katie, do you want to do a quick introduction here?
Yeah, so my name is Katie, obviously, and I am a senior product marketing manager at Dext. So I've been at Dext now for just over 2.5 years, I think. But before joining Dext, I was an accountant in practice for, I think, nearly 11 years in total. I started as a bookkeeper and I worked my way up to a senior accountant before I left. Prior to working at Dext, I have worked at Xero and at Sage, so I've kind of been around a little bit. But yeah, I'm really excited for speaking about MTD IT today. May sound like a bit of a strange thing, but it is something that I'm very interested in working in product marketing.
Excellent. Thank you, Katie. And Paul, we've done a few of these together.
We have.
Feel free to throw in your introduction for those that don't know you.
We go a long way back. So yeah, I'm Paul, VP of Accounting and Product Strategy. I've been at Dex for about 4 years. Prior to that, I was in practice for just over 20 years. I was one of 8 partners in quite a large firm, and I'm very heavily involved on all things MTD, and that actually stems back to when I was heavily involved with MTD for VAT back in 2016, where we did one of the first VAT returns under MTD for VAT. So I think, when I look at all of this, there's always going to be some challenges along the road, but there are some huge opportunities and benefits that come from all of this sort of digitalization. So I'm looking forward to talking through all of those today.
Excellent. Thank you, Paul. So just as a high level summary of the things that we're going to talk about today, we're going to start off just kind of understanding the challenge and the opportunity, as Paul just said. With every opportunity there are challenges, and with every challenge there are opportunities. So we need to make sure that we understand this and we're aware of it. Probably the most important bit here, I think, is the consideration. So what do you need to be thinking about right now? This kind of came home to roost on me recently in a session that I was running with one of my mentoring groups, where we were talking about MTD, and we started to, or whilst the conversation was going on, I started to think about kind of timeline and stuff on this, and it kind of suddenly dawned on me that in 17 months' time, we have to file the first quarterly update for our clients. So 17 months away, you've got to be hitting the button to send that first one almost to the day, isn't it, Paul? So
It is 7th of August
7th of August
2026. Yeah.
is the start of this. Now, that might sound like, well, that's ages away, 17 months, but let's think about what's going to happen between now and then. Firstly, if you think back to the last 12 months, did you have much spare time in your day job? Did you have a load of slack time that you could have tackled a project like this? The likelihood is that you didn't. We've also got another self-assessment deadline to deal with within that time frame, as well as a day job. So there is a lot to do in what is a fairly short period of time. So we'll talk a bit more about the considerations around that. We'll think about the technology, because clearly the point here is that this is digital. So we've got to think about the tools that we're going to use. And as Paul and Katie will explain, it's not as simple as saying, well, we'll just carry on doing what we're doing, because the likelihood is that isn't going to work without some tweaking in terms of the way you do stuff. And then Katie will take you through a demo of what Dext Solo are doing as one of the solutions that is there and ready to meet this requirement. Of course, lots of times questions, so do pop in those questions into the Q&A box, and we'll pick those up as we go through or at the end of the session. So let's get cracking. Paul, the challenge. Talk to us about the challenge as you see it.
So for me, the challenge as I see it, and I speak to lots of accountants and bookkeepers about this, the challenge for me is actually getting information in from clients. There is a real challenge at the moment of clients providing the necessary information for their self-assessment return. Hence, we always have this big rush at the end of sort of November, December, January, that sort of period. And when you look at even the stats from HMRC, around over 50% of tax returns being completed within the January month alone. Imagine a world where all of your clients who are mandated all have the same quarterly deadlines. And what you don't want is all of this information coming in that week in the run up to that deadline being the 7th of the quarter. You need information in a perfect world coming in real time, or as close to real time as possible. So that information being received during the course of the quarter, because the compliance part is actually very straightforward. When you've got the information on the quarterly updates, you don't have to adjust for any allowances. You don't have to include any non-mandated income. You are just submitting the income and expenditure for that quarter on a rolling basis. And it should just be the click of a button. If you've got information coming in, if you've got completeness of records, if you're spending less time chasing, and you're using AI tools to effectively extract, categorize all of that information for you, this process should not be a repeat of January every quarter.
And just probably worth just taking a step back, Paul, just in case anybody's here and hasn't yet got round to really understanding, even at a high level, the requirement here. So do you want to just do a very quick summary of what the requirement is on the mandated?
I can. So from April 2026, where you have clients who have income from self-employment income, sole trader, or property income, and their income, their turnover is more than £50,000, and that can be £50,000 from one income source, rental property income or sole trader income, or combined, is more than £50,000 in turnover, you have to, from April 2026, submit quarterly income and expenditure figures to HMRC. From 2027, that threshold lowers to 30,000. And during this course of Parliament, that will lower again to 20,000. What that ultimately means is from 2026, it's estimated to be around 700,000 individuals who will be mandated for the 50,000 threshold. There'll be a further 900,000 approximately from 2027, and that number again from well, at some point after that date. So in the region of over sort of 2.3, 2.4 million individuals will eventually be mandated to use digitally approved software as approved by HMRC and submit quarterly numbers.
And I think we talked about this briefly yesterday, didn't we, Paul and Katie, that if you want a broad brush indicator, then the likelihood is in April 26, about 30% as a guide of your sole traders and landlord clients are likely to be mandated. That's a real broad brush. Everyone's client base is different, but if you have a fairly average and fairly typical mix of sole trader clients, the likelihood is about a third of them, as a kind of line in the sand, are likely to be mandated in April 26.
Yeah, and it's important to know that all clients will have the same quarterly reporting period. You can make an election to move from the fiscal quarter to the calendar quarter, but in essence, everyone, same quarters for all clients, and that may not necessarily be aligned with any of your clients who are also VAT registered. You could actually have a different VAT stagger, which is not aligned with your quarterly updates for income tax.
Okay. And these are some of the considerations we're going to take you through. But what I hope already is you can do some very quick numbers in your head in terms of, roughly how many sole trader type clients you've got. About a third of them are going to need to file an update in 17 months' time, which means there is a bunch of stuff that you've got to do for those clients in the next 12 months, really, to enable you to be ready to do that. So that's the reality check in terms of where we are. And sorry, Paul, I kind of took you off track in terms of this challenge. Are we anything else that you see as a challenge?
So the challenge is, you need to approach this looking at a consistent, standardized approach across all of your clients. If you've got some clients dropping records off potentially, you've got some clients doing it ad hoc, it's going to create a bit of a headache for you and your teams. So this is where technology can really help, bringing in that standardized, consistent approach. Real time will mean that these quarterly updates should not be as much of a challenge as many people think they are going to be.
Yep. And you're having lots of conversations with HMRC. I'm sure you've heard some of the skeptics out there saying, well, some will be saying it's still never going to happen. And I think we've gone beyond that, haven't we? I think there's a reality that this is here now. This is going to happen. The second one is, oh, well, if it's only updates, we'll just file nil returns for the quarters and then do the bit at the end. Have HMRC kind of had anything to say about that?
At the moment, there is that risk that people will do that, and the penalty reforms when they come in for MTD for income tax IT will only apply if you miss quarterly updates, and obviously the finalisation as well. I take a step back from that and go, this is a real opportunity for you to work close with your clients. Imagine a world of up-to-date numbers. Imagine that world of being able to have more proactive conversations with your clients. How many times have we been in a position where a client should possibly have been VAT registered 9 months ago, but because you're only getting the information once a year, that VAT registration date has been missed? Think about payments on account. More up-to-date numbers allows more planning around that. Considerations around whether someone should incorporate or not. So yes, you could just submit these nil numbers. And if lots of people do that, I suspect HMRC will then start to bring in some additional requirements, almost certainly.
Yeah.
But it's the opportunity of up-to-date numbers that allows you to offer more.
And I mean, we know that HMRC know who's in and who's out, and that if somebody's submitting nil returns, and the likelihood is they're going to say, well, hang on a second, this doesn't match what you told us last year, and but anyway, you've kind of teed up my input on this really nicely there, Paul, with your summary. And this is a quote that some of you may have heard me use over the last or probably about 7 years. So Paul talked about MTD for VAT in 2016. I wrote my first book, The Digital Firm, in 2018, and on the back of that, I was doing lots of speaking stuff around the country. And it was around the time that MTD for VAT was coming, or MTD full stop was coming, and I said this, and not on a number of occasions, and I think it still holds true today, in that MTD genuinely is a once in a generation opportunity for us as accountants and bookkeepers to fundamentally change what we do and how we do it. So we have this great opportunity to get closer to our clients. We have this opportunity to generate new revenue for adding more value. We have this opportunity of helping our clients run better businesses because of the visibility of the data. And as the last point of this quote says, the good bit is that we get to blame it all on HMRC. So it's like we've got all of this opportunity to do really good stuff for our clients. And it's not a case of our clients saying, oh, do you really want me to do that? It's like, well, no, we don't, HMRC do. But it's okay. You don't have to worry about it, because we're going to hold your hand. We're going to help you through it. We're going to make sure that you're compliant. And what you're going to get on the back of this is much better information about what you're doing, what you're earning, where your business is going, what your tax bills are going to be. So we have to see this as an opportunity. And the likelihood is most people that are watching this either live or on demand know this. You're already on that path for digitalization. This is the next step. This is the bit that helps us get the mandation from clients, because we know how hard it is to get clients to change what they're doing, and it's normally regulation that does that. But let's use the regulation as the opportunity to do something really valuable. So for me, that's the opportunity here. Yes, there's challenge, but I said this 7 years ago, and we missed the opportunity. We didn't get the opportunity to do all the stuff that we could have done 7 years ago. And people have heard me talk about daily bookkeeping and all of the stuff that I genuinely believe is what we should be doing. And this is going to help us do that. So that's the opportunity. Let's start to think about the reality. Paul, Katie, I don't know which of you wants to kind of pick up on this.
Katie, do you want to run through this?
Yeah, I can do. So from the 7th of August 2026, that's going to be the first quarterly filing that you're going to have to do for the period from the 6th of April to the 5th of July. So whilst that may sound quite a way away, that's actually really not. And then we also need to think about everything else we need to prepare beforehand. And I'm going to go on to that in a second. But if we then go to quarter two, that's then going to be the 7th of November. So again, we're going to have to take everything from the 6th of April up to the 5th of October. And this is just going to, carry on and on and on. So we're going to have to really start thinking about how we plan this, how as practices, we can actually plan this moving forward to make sure that everything is as prepared as it can be as possible. And then when we get all the way over to, 2028, that's going to be the finalization of the self-assessment for 26, 27. So already, we've gone from 2026, 7th of August to 31st of January, 2028. And there's already so much more work that we've got to do. Well, not me personally, but accountants and bookkeepers that are involved in this are going to have to do to ensure that they're ready, and then they're able to then service their clients for this.
Perfect. And I think,
Paul, you had a concern in here that we need to be conscious of as well, don't you?
100%. So what this demonstrates is we've got the 25-26 tax year that we're fast approaching. That's going to be due January 27. Now, if you imagine current process with some of your clients, they often only provide their information towards that filing deadline of Jan 27. But you're going to be dealing with 26-27 tax year from August 26. So you've got this real challenge potentially of asking for information relating to 26-27 before you've got the information for 25-26. And this comes back to the importance of that sort of real-time data collection. Now, if you imagine from this April coming that you've got the information just being nicely uploaded by your clients as and when it's arising, whether it's invoices, receipts, bank statements, what it ultimately means is when we get to April 26, the end of the 25-26 tax year, you should have all of the information already available to start the completion of the 25-26 tax year. At the same time, information just continues to flow in for 26-27, so that you can then do that first quarterly tax or first quarterly update in August 26. So you need to consider that sort of communication with clients. And the other sort of couple of other important considerations here as well, quarterly updates are now year to date. Previously, HMRC were doing each quarter in isolation. You had to go back and correct any previous errors and omissions. That's now been completely removed. So this amendment was made following feedback from accountants and bookkeepers and the accounting bodies. So year to date is so much better. Secondly, if your client has more than one income stream plus property income, they are separate quarterly obligations. They are separate quarterly updates. So if your client has multiple self-employed income streams, self-employed 1, self-employed 2, that's quarterly updates for each of those. If they've also got rental property, UK rental property, that's also another set of 4 quarterly updates. And if they have foreign property as well, that's separate obligations as well. So in that scenario, on an annual basis, 4 quarterly updates for self-employed A, 4 quarterly updates for self-employed income B, 4 quarterly updates for property income, 4 quarterly updates for overseas property income, plus the finalization. So that is 4, 8, 12, 6, 17 submissions. And just to give worst case scenario, and this is, I am painting worst case scenario, and the likelihood of this is slim. If they are VAT registered as well, you've obviously got the quarterly updates or the quarterly VAT returns as well. And this is why you have to look at each of your clients on a client by client basis to see how far they're impacted by all of this legislation.
Yeah, we'll come on to that, but I think the summary point there is if you've got clients that sit down in October, November, and go through that process of pulling all of their data together for the year that's got to be filed in January, they're going to be potentially doing that after they've already had to give you 2 quarters of information that have got to be filed for the tax year that they're in at that point in time. So the whole point here, again, going back to what I said right at the beginning, if you do nothing else on the back of joining us today, you think about the practical application of what you're going to do here in terms of how you're going to communicate to clients, make them aware of what's happening, make sure they understand the timeline and the expectation on what you're going to need from them, assuming that you're going to do this for them. I mean, that's part of the consideration you've got here. Do you do it? Do they do it? It's a hybrid. How's that going to work? But that's the key from this session today. Go away and make a plan, and we'll talk about what that looks like in a moment. We've got some questions here, Paul, that's probably worth answering as we go. So first question, why would we not work to bring up to date and filing nil returns? Surely that's a disservice to clients. Yeah, absolutely agree. We wouldn't do that. I was using this kind of, there are skeptics out there, and I've already heard people talk about, oh, well, we can just file nil and not worry about it. Absolutely, we're doing a disservice to clients, and that's why it's not a good thing to do. Here's the questions. Do you know if the returns will all need to be done in separate software for all income trades, or different sources of income?
So you can use multiple pieces of software, and you could use a different product for different income streams and quarterly updates. What that ultimately means is you could use something like Dext Solo. All of the information, quarterly updates, it goes to HMRC. HMRC store all of the filings against a client's, an individual's Nino. You've then got your tax product that may already be fully embedded within your firm. You can pull the totals back into your tax product as long as it's already approved by HMRC, and you can then do the finalization within your existing tax return solution. So you can use multiple products as long as they're approved, and everything goes to HMRC and pulled back down.
That's a really interesting point, isn't it, Paul? And really important that we flag that. So what we're saying here is you don't need to do your quarterly updates in your tax software. So if you're using Iris or CCH or TaxCalc or whatever, it's not a case of needing to put data into those solutions to do your quarterly filing. As Paul said, you can use whatever product it is you're using for the quarterly filing and use the HMRC links to your kind of in-house tax compliance software to pull that data down, so you're not redoing work and duplicating and everything else. I've understood that right, haven't I, Paul?
You have, and I've just seen a follow-up question around, do you need, I can't answer it for every product, but for Dext Solo, you only need one subscription with Dext Solo, and you can add multiple income streams. So you could have 3 self-employed income streams and property income. For property income, that's not split out. If they have multiple properties, like the tax return now, it's all consolidated on the SA 105, whereas self-employed income, each income source for self-employed is a separate submission. But yeah, it's one subscription.
Great. Thank you, Paul. And there's a question about the presentation. Yeah, I'm sure we're going to do a follow-up email to everybody anyway, with a copy of the recording. So we'll make sure we attach a PDF of the slides as well. I assume that's okay with you, Paul.
Yeah, absolutely fine.
Yeah, great, excellent. Let's crack on. So, are we done with timetable?
Yes.
And I hope that gives that realization in terms of, or raises awareness of this potential challenge we've got in terms of the timing of the data, which is why taking action now, and we've still got the opportunity to use 25, 26 as the year that we start to get clients into the mindset of what they need to do come 26, 27. So that's a window of opportunity we've got. It means we can spread the workload, and we're not doing it all in the 2 months we have between finishing the 25-26 tax return season, sorry, 24-25 tax return season, whilst we're trying to get ready for this as well. So let's get into some of the details, some of the practicalities. So what should we be thinking about, Paul, Katie? Where do we start?
I'll take this one. So I think with obviously 2026 approaching quick and fast, firms will need to assess which clients are going to be impacted, obviously, how they then maintain those records, and actually then how to prepare them for that transition. Because it's not just the practice, it's obviously the clients as well. So the first one, quite obvious, but also really important, is segmenting your clients. So how are the impacted clients keeping those records? So are they already using software? Are they using a spreadsheet? Are they still in a bag and box type of client? And then being able to just take whichever those clients are and then put them into buckets. That's going to be really key. The other bit is going to be then, do they provide those records annually? Which I'm going to assume that quite a few are still. I don't think that's too presumptuous to think, but from that, are you spending time then sorting through things like bank statements? Are you stacking the receipts up nicely? You know, how are you doing that at the moment within your practice? And then we need to think about quarterly reporting and the fixed deadlines. So that capacity planning, as Paul and Will, you've said earlier, is going to be absolutely crucial. And how will you manage that workload internally? And just something on that, I've spoken to various practices and also to bookkeepers around the UK on this, and something that I think that's come quite apparent is this isn't just going to be something that tax teams do anymore. I think there will be some delegation, just purely because there is going to be more of a more capacity on bookkeepers now, I think, to be involved in this. So it'd be quite interesting to hear your thoughts on this, Will or Paul.
Yeah, I think you're absolutely right. I mean, when we think about what the tax teams are doing with the year-end self-assessments, as far as I see it, I think that's where that's going to their focus is going to continue to be. This almost becomes part of, as you say, Katie, the bookkeeping process. It's the client comms, it's the communication, because we're not doing tax work. It's like the quarterly updates are not about doing tax work, are they? It's about taking the inputs and the outputs and turning them into something that we can file, and using the software point that we raised earlier. At the moment, tax teams probably pull down what data there is from the agent account to complete the tax return anyway. So we're almost doing the same thing, aren't we? So it's almost, I'm sure the tax teams will love this. I mean, like that, I don't see their workload changing significantly. What I think is that we're going to see the kind of the accounts and the bookkeeping teams and the outsourced teams and everything else that are going to be the ones that are probably going to get the tax team saying, well, actually, this isn't really our job. This is like it's bookkeeping. So you probably need to take this on. So I think it'd be interesting to know what the mix is of people who got watching this in terms of who are tax people and who are accounts people, because I think there's a risk that it's going to be the accounts teams that are going to be picking up this additional workload.
I
I mean,
100% agree on that as well. And I'm having a lot of conversations on this. And many of the firms I speak to, they want as little as disruption as possible. So, number one is often we're not going to change the tax product. Number two is because the quarterly updates, although you can make adjustments if you want to and things like that, there's no legal requirement to do so. It is income and expenditure being reported, in which case, and there's no penalties for inaccuracies or anything like that, as we mentioned earlier. So more and more firms are increasingly looking at the view of many of the bookkeeping team were already familiar potentially with Dext. Something like Dext Solo, it's the same core functionality. It's just different reporting needs and things like that. It's less disruptive. It's potentially easier to bring in and implement. And the tax team just pick up the totals when they're ready to do the finalization and deal with any final adjustments. So that is the approach I'm hearing more and more.
Yeah, Paul,
Yeah.
I had a question that I didn't know the answer to, or I was surprised at the question on a session recently around the fact somebody said their understanding was that MTD for IT was likely to be cash basis reporting rather than accruals basis. Have you
No,
heard?
that's
Okay,
so the likelihood is the individuals who are mandated are probably operating under a cash basis for reporting
yeah,
requirements. But when you actually sign up a client for MTD, you have the option to choose whether you want to
got it.
report on a cash basis or an accruals basis. So
Okay.
either method is fine. The default, which actually came in or is about to come in, I think is cash basis as a default as standard for these individuals, but you can use accruals
Yeah, and I
basis.
think is there a change? I mean, and again, we're going slightly off topic here, but it's just in terms of relevance. Do you know if that's changing on the SA 100 and an election is almost made by tick the box to say that you're reporting accruals?
I know when you sign up, I think you actually tick the box. You
Right.
actually
Okay.
state because, yeah, from that point,
Okay.
yes.
Great. And one thing I want to pick up on this slide before we talk about fees, which is obviously a big issue, is the third bullet point on segmentation. This idea about engaging with clients. And I had this a few years ago when we were coming up to MTD for that, and I was talking to firms, and there was an element of, dare I say, cockiness about readiness for MTD. In terms of and us included here, to a point that we were comfortable that we could service because all of our clients were using digital tools. So we sat there quite smugly thinking, well, we're okay, we've got it all sorted. But the key point is that whilst you know you're sorted, do your clients know you're sorted? So what conversation have you had with your clients to say, hey, this MTD thing is coming, and it's going to impact these people, and you might be impacted by it, but don't worry because we're aware of it. We're going to make sure that we get you ready for it. Because if you don't tell your client, either somebody else's client will, which is not good for you, or worse still, HMRC are going to tell your client. Um, and that's a bit uncomfortable, isn't it? That the HMRC are telling your client about something that's going to impact them before you do. Um, Paul, what's the MTD HMRC timeline for communications?
I was going to say HMRC are going to be telling your clients. They've drafted all of the letters. They did put it in the agent updates, the February agent update about 2 weeks ago. They're going to start writing to agents now between sort of over the next 2 months. And I think I can double check. I think from May onwards, they will start contacting individuals directly who they believe will be mandated for MTD. And mandation is determined by its current year -2, effectively, the way it works. So when you look at 26-27, when mandation comes in, what they're actually going to look at is the 24-25 tax return to determine whether someone will be mandated from 26-27. So this current tax year will
Yeah.
be the determining factor.
Yeah. So, but the key point there is comms. So,
It is 100%.
yeah, you need to get ahead. If nothing else, it just needs something really simple to say to clients, this is coming, this is who it impacts. If we think you're impacted, we're going to be in touch with you and we will make arrangements and we will keep you compliant. If you have any questions, do contact us. That's it. But if you don't do that, you are at risk that
Yeah.
HMRC may be talking to your clients before you.
And I can say from MTD for that, all those years ago, we won a huge amount of work when we were just speaking to people saying, you know, we're all geared up, we're all set up. Has your accountant spoken to you? Oh, they haven't. Oh, well, speak to us and we can help you go through it, all the process.
Yeah. Fees is a big one, isn't it? Because that I've heard people say, well, if we've got 4 returns, we'll just quadruple a fee. Clients are not going to swallow that, are they? Particularly when the software costs to be rolled in here as well. I mean, it's huge, isn't it? In terms of, again, the considerations. Yes, there is undoubtedly going to be more work if you are only working with a client once a year, and there is going to be a requirement for you to help them out at least 5 times a year. How do we go about thinking about that in terms of pricing? I mean, this question is a whole webinar in itself, isn't it, Paul?
Yeah.
It is. I'm actually doing a whole webinar on Friday on this, a whole hour on fees. It is a huge area for consideration. Um, and the key to all of this is flexibility for your clients, and offering them ultimately different sort of levels of support and service, which I've sort of noted sort of 3 down there as examples. But the other key consideration for this is also you've got to test the waters first with your clients. The worst case scenario that can happen is you have like bronze, silver, gold. You say your gold package is £50 a month, whatever, it doesn't matter what the figure is. If all of your clients turn around and go, we'll take the gold package, what you've ultimately done is underpriced it, underquoted for it, and it will put a huge amount of pressure on the team. If all of your clients take the bronze package, probably means you're too expensive and you've overcharged or overquoted the sort of silver and gold. You want that bell-shaped distribution. So in the perfect world, you have some clients who take the premium service, you have some clients who take the more DIY, do-it-yourself type service, and then you've got the clients in the middle as well. But there is a lot of considerations here around, number of bank accounts, number of transactions, number of income streams. All of these things have to be thought through.
We're back to where can you drive efficiency in
Yes.
what you do? How can you build a service offering built around the right people doing the right bit of the work, using the right technology to give you the best possible solution at the best possible price that makes it appealing for your client, but generates you the margins that you want for the work that you're doing. And it's back to why should we be doing daily or weekly bookkeeping for clients? Let's get a really slick process to enable us to do this, and get to the point where we can be saying to those sole trader clients that we can take care of all of this, and it's the cost of a cup of coffee a day, or something along those lines, that we make it a really compelling reason for people to kind of want to do it. So Paul's mentioned he's doing a webinar on Friday, Paul.
Yeah.
Friday. We've got a QR code or a link, I think, to it at the end of the slide deck here, so we'll share that. And I would strongly suggest that you join Paul for that session to think about what's probably one of the most complex areas for you to circumnavigate here.
I think this is the
How much you're
hardest
going to charge
webinar I've
for it.
ever planned for in my life. And I've done a lot of webinars and I've done lots of technical tax conversations as well, but pricing is a hard one.
So segment your clients, think about how you're going to collect the data, think about how you're going to charge for it. Next guys, cash coding team and other considerations. Who's got it?
I can also take this one.
Yeah,
if
you
want
take it,
to.
Katie.
Yeah. So yeah, I think with cash coding, I think private landlords in particular will often use that personal bank account, which will then have all of their property income as well as, all the fees that come with it, like maintenance fees, etc. But this can then obviously lead to challenges when it comes to the bookkeeping work. So encourage your clients to either open a separate bank account to streamline the record keeping, or consider software solutions. Shameless plug here, obviously, for Dext, but consider a software solution that will allow you to actually do that as quickly and easily as possible. You'll also may then want to think about additional fees. So, if a single bank account is being used, then actually how long is that time spent separating everything out from the personal to business? I know from my time in practice when I was going through, a personal tax return for certain clients, how long a process that would take if it's someone that's predominantly just putting all of their personal stuff through with a bit of their business. So it can really, really take a toll on the time spent on that particular client.
And team, Paul, what do we think
Yeah,
about
I
internally?
think in the team you can break this down, but ultimately, when you're looking at how many of your clients are mandated, that's the measurable impact. You've measured that there are 50 that are mandated. You need people who are actually accountable for making sure that clients are aware as well. So if you have 100 clients who are mandated, what is your process to ensure that all of those clients have been spoken to? What is your process to make sure that they're all comfortable with the new process that you're implementing in terms of training? So you've got all of that in terms of tracking that. Then you actually get to the legislation part in terms of all of the quarterly updates. And this is where looking at different solutions, looking at the dashboards that they provide, so you can very quickly, easily see what are your open sort of quarterly obligations. What are the quarterly updates that are needed that haven't yet been filed? So going forward, longer term, it's that visibility and awareness of ensuring that all of these updates are met, because once the legislation is in, the penalty reforms come into play, And this is where a points-based system is going to apply. And when you miss quarterly updates, you'll get a point. And once you have so many points, I can't remember the number
You get prizes.
off my head, then you get, yeah, sadly, it's sadly, yeah, points don't mean prizes. Points ultimately mean penalties. And I think the starting point under the new penalty reforms, I think it's £200 is the starting penalty. Not for your first missed quarterly update. I think it might be when you've accrued 4 points, but I'd need to double check that off the top of my head.
Cool. And anything else on the final point here, Paul, in terms of things like engagement letters and
Yeah, I think these are the things that are going to be so important, which will tie into the service that you're providing to your clients, but you are going to have to need to review, amend all of your engagement letters for those individuals who are mandated. Are your clients responsible for the bookkeeping, and your responsibility is the quarterly update and the finalisation stage? So all of that needs to be considered alongside the fees and everything else. And then just a couple of points, I think it's very easy to focus on the legislation, but it comes back to there are so many benefits to having that real-time data collection, up-to-date numbers. So MTD, whatever software you use, it's also suitable for your non-mandated clients. If you're getting all of your clients just providing information more closer to real time, everyone, in a January, your whip goes up, the client gets their tax bill, which is more expensive or higher than they thought. You then send them your bill, which they think is higher than what they were expecting. They then get their credit card bill from Christmas, which is also higher than what they're expected. So from an individual's point of view, their personal cash flow is often not great in January, February. Imagine doing that work 4 or 5 months earlier, you getting your bill out much sooner, you getting paid quicker, just improving your own lockup, improving the cash flow within the firm. So there's all of that as considerations as well.
Yeah. Perfect. We've got just under 15 minutes left, so I'm conscious we want to get Katie to give us a quick overview of Dext Solo for anybody that hasn't seen it. So a couple of bits here, Paul. There's some stuff on kind of spreadsheets and some stuff around AI. Do you want to kind of summarize that fairly quick? We can let Katie jump on.
100%. So very quickly, you can use spreadsheets for MTD for IT, but you would then have to use bridging software to submit the quarterly updates. Some of the big issues around spreadsheets is errors can occur. You're spending more time potentially checking the numbers. You haven't got digital receipts attached. You haven't got that consistency and standardization because all of your clients could be using different spreadsheets. And imagine getting a spreadsheet every quarter, potentially from your clients with all of these numbers. It doesn't become a scalable model. And this is where AI technology can really transform that process.
Yeah. And I guess you've covered some of that in the
And
downsides of
yeah.
spreadsheets. It's like let's use the technology that's been here for, I mean, we as I've said on these things before, we've kind of been doing this for 15, 16 years now. The technology is there, it's tried, it's tested. Let's use it to make real positive interventions into the way we work with our clients. So last one before we bring Katie in with a demo, Paul.
This is what we've discussed of how you can use one solution like Dext data collection. We will pre-populate the SA 103, the SA 105 for the quarterly updates. All of that can be submitted to HMRC with the click of a button. When you get to the finalisation stage, as long as your tax software is approved as well, which it almost certainly will be, those totals can be pulled back. You can do the finalisation in your existing tax software, submit that to HMRC, and everyone's happy.
Excellent. Katie, I shall stop sharing and I'll let you jump on. If anybody has any questions while Katie's going through this, pop it in the Q&A box and we'll pick anything up for you before we wrap up shortly.
Perfect. Yeah, so it's my my job now to take you through Dext Solo and what that does. So obviously Dext Solo is designed for self-employed individuals and private landlords who are unincorporated, not VAT registered, and don't need the use of integrated accounting software like Xero, QuickBooks, etc. But what it does is it makes tax reporting much easier by collecting all of that wonderful data from your clients in real time and then offering you multiple ways to actually submit those records, be it through the app, desktop, or email, or however your clients want to get that information over to you. But what that does then is it ensures that everything is accurate and complete. And then with some of the automation tools, which I'm going to show you in a minute, it just means that things like disallowable expenses, anything else that can be a bit of a pain, just makes it much more simpler to get all that information in. And obviously as well, there is the reporting element, and we do have that. And I'm also going to be able to show you a quick preview of what the quarterly submission will look like in Solo. It may change slightly as it's in beta testing at the moment. So some of the look and feel may change slightly, but obviously the main principles are there. And we do have people beta testing at the moment with us. But I will shut up about the preview and actually get into the product itself. So we have here someone called Paul Lodder, don't know who they are, but this is the dashboard for this particular client. And you'll see here we have those income sources. If we did want to add any more in, we can do just by clicking here and then choosing whether it's self-employed, UK property. As Paul mentioned earlier, if you do have a mixture, that is all included under one license and it all sits within here. Now, I'm going to take you through the self-employment side of things first. So I'm going to click on Quick Pick Cabs, which I don't know, Paul, if you chose that name to make it as difficult as possible to pronounce, but I managed to.
GPT.
Well, I managed to say it without fluffing that, so that's good. If you're already familiar with Dext, this will probably look quite familiar to you, but if you're not familiar with Dext, this is the costs inbox. So this is where your client would, or perhaps even internal members of staff would start to add the documents in. So you'll see here we do have an add documents button at the top, and there are multiple ways to get that information in. So you could drag and drop. If it's someone that's sent that over to you and you happen to have it on your desktop, you can drag and drop here. If it's a client that actually sends emails over to you, you can use this email address. Each Dext account has a unique email address, which they can then send everything directly into Dext. Great, really, really easy tool to use. We also have the mobile. So if they would like to download the mobile app, they can download that as well. And then we do have something called Invoice Fetch. So what that does is it connects with various suppliers. I think we have over 1,000 different companies that we connect with, things like Vodafone, etc. And basically what that means then is you can send that information directly into Dext without having to phone your client up and say, where is the invoice for March? So that's really great, really fabulous. Same principle for sales, albeit you're obviously not going to need Fetch because it's coming directly from them. But if you do have sales invoices that they send to you, again, you can drag and drop, email in, or mobile. The final submission then is bank. So if you need to, if your client has bank statements that they send over to you via PDF, or even if they're dropping it off in a box, you can then convert that to PDF and then add that here. So what happens then is you have your costs inbox, all of that information is in, and then Dext starts to do all the really fancy fun stuff. You'll see here on this particular line, we've got auto-fix garage services. Now, what this has actually done is it's already categorized it for us using auto categorization. So I've not even had to touch this. The way that this works is Dext is obviously OCR and also has AI capabilities. So for every invoice receipt that comes into our system, it will allow us to read that and learn from various different places what a particular invoice or receipt does. And it will then actually just apply that for us. If, of course, we need to change that, we can, but it's already done it for us in this example, and it looks correct. So I'm happy with that. We can then start to obviously go in and we can start changing these, categorizing them to the relevant account. What I will say on the terms of the categories, they are set to the HMRC boxes. But if you did want to change that, if you want to kind of set up different reporting for your clients, you can go in and change all of that in the settings. You can start to kind of play around with that. As long as it's assigned to a tax box, Dext is going to pick that up for the reporting later on. So you do have that option. Other things that we do within Dext is we do mileage. So if you want to obviously have clients that have mileage, you can submit that as well. And they can do that on the app super easily. You can even drag and drop the route. So if you've got someone, well, if you've calculated the amount and it's saying 200, but actually you had to go via somewhere else because there was a, I don't know, a roadblock in the way, then you can just adjust the route. We also do have GPS tracking coming. That's not quite out yet, but again, that's something coming along in a month or two's time, I do believe. So I've covered off mileage. I've covered off how you get stuff into Dext. Same principle with sales, as I mentioned before, so you can add that in at any time. One thing you can also do is you can create a document. So if you are missing any information, it's not gone through a bank and you just need to get something in quickly, you can just create a document here just by assigning document owner, obviously filling out, in this example, who the customer is, what the category is. That will then generate it for you. And if you do need to make any changes, you can just make the amendments. So that's really, really super simple. The bank, as I mentioned before, if you do have, you can set up a bank feed. So if you have clients that are happy to log in, do that for you. They don't even need to be with you at the time. You can actually send a request, which is really useful. So you send that request over to them, they can then log in and authenticate, etc., and get that done. Or if they are with you, you can sit there and do it. But yeah, you can set up a bank feed, or you can, as I mentioned earlier, you can add a bank statement PDF. What happens is then we get this lovely screen here, which has all of our transactions. We have our paid out, paid in, and then you can start to use some of the tools within here to actually start categorizing the invoice, the bank statement lines. One new thing that we do have within here, based off of feedback that we had from people whilst, Solo was in its infancy, was the ability now to be able to bank match. So where you do have costs and sales, invoices and receipts that actually match to something on a bank statement line, what you can literally do is click match here, find that transaction, tick it off, and then match it. And then, of course, then we don't need to worry about the double counting, which is brilliant. We do have other tools as well. So if we wanted to fill this out more quickly, we do actually have bank rules. We also have the advanced search feature. I'll show you bank rules in a second, but I'll just show you the advanced search feature. So if we just want to look at, I don't know, anything from say 100 to 200 pounds, just apply that. That's then going to bring up everything that we need for that. And we also have filters as well. So if we just wanted to look at the things that had been matched, we click there, etc., etc. So as I mentioned, bank rules, we do now have bank rules as functionality. So if I just pick up this one here, Netflix, and I go to, oh, sorry, that's not what I wanted to do. Click on it. I'll just create it. So if we wanted to create one for Netflix, we can say Netflix here, and we can say Netflix again. What that will then do is it will pick up any transactions that say Netflix. If we wanted it to be more specific, we can say that. Obviously, that's not going to work because this says Netflix subscription. But if we wanted to make a rule, obviously as specific or as general as possible, we can do that. We can choose whether it's paid out, paid in, and then we can choose which category, most importantly, that it goes to. So I've gone through the bank, I've gone through the costs and sales. We have a few minutes left, so I'm going to go quickly now to the reporting. So this is what the report looks like. You can choose which tax year you want to look at. You can toggle off and on the previous period and the tax boxes. All of these reports are exportable. So for now, obviously, MTD IT isn't quite here, but if you want to start using it now for just, normal self-assessment returns, you can import all of this information and then upload that into your compliance software. Really, really super, super quick and easy to do. I'm just going to fly quickly into the property side of things. So obviously, exact same methods of adding the data in, getting it all in. One difference here, obviously, with the property is if you're using one bank account for all of your property, what you can do is within the business settings, and I believe it's in lists, we can go into our properties here. We can actually choose the ownership percentage. So if we do have something which we don't fully own, or if it is something that we fully own, we can choose that percentage here. And then what that means is once we've filled this all out, is if we then go back into our costs or our bank, we can actually then say not only which rental property it relates to, but also then in the reports later on, it's going to portion that out for us. So if we do have 25%, it's going to just have 25%. So that again makes things so much easier. Now, I appreciate that's quite a whistle-stop tour, but just one thing that I did want to show you was that quarterly reporting. So I'm going to go into my fictional character, Herman, and you'll see here, again, we've got this dashboard for this particular client. Now, below here, we have our submissions. So if I click into here, you'll see we have our next period coming up, which is January to April 2025, and we've submitted these previous periods here. The tax estimate on the right-hand side, that is giving us an estimate based only on the information for this particular submission. So this is a rough estimate, and this is actually something that's been mandated by HMRC that every software should include. So it just then allows that particular client to have a rough estimate of the amount due for this particular income source. Now, we can view previous submissions by clicking previous submission. It's going to let us know if there's been any changes. So you'll see here it says a difference. And final bit then is to show you how you would prepare that submission. So if I click prepare submission, again, it's going to give us that income, expense, profit, loss. We can then go through these, check we're happy with them. And then if we're all okay, we can confirm, submit, and voila, job done. But yes, very whistle-stop tour. Hopefully that's given you a brief outlook of what Dext Solo is, how it works. But yeah, if you do have any more questions, please feel free to reach out to myself or the wonderful Paul.
Thank you, Katie. Brilliant. So just as we wrap up, conscious of time here, so I will just about find my my slides again and be back with you all. So any questions at all, pop them in the chat box for the moment, but I haven't seen anything come through yet, so I think we're still okay. So we've done the Dext Solo bit. So really in terms of wrapping up, we mentioned that Paul is doing a webinar on Friday at 11 a.m. purely about pricing and workload. I think the QR code here might well be the code to register for that webinar, but if not, we will include the link in a follow-up email that we send to everybody. And we are delighted to be joined by Dext for some sessions in our App Advisory Plus Theatre at Accountex in May. And I have very little doubt that there will be lots of MTD conversations going on at Accountex and other events over the coming month. Paul, question, will the webinar be recorded on Friday? I assume if people register, they will get access on demand.
100% they will. Yes.
So Jane, if you register, you'll get a copy of the recording and can watch that back. So we are 3 minutes over. I did promise a hugely insightful and valuable session today. I hope that's what you've got. The fact that everybody kind of hung around right until the end suggests that we were doing a reasonable job. So thank you all for taking the time to join us. I do hope that it has done what we said at the outset, which is give you some actions to take some action now, which I think is the key message here. This won't wait. I think we have to keep moving. Thank you hugely to Paul and Katie for their valuable input. If anybody has any questions, we did on the introduction slide at the beginning, we did have email addresses. So I'll just go back there. So there's email addresses for both Paul, Katie and I. So if you have any questions that we haven't been able to answer for you or you haven't had a chance to ask, do get in touch. Do join Paul's webinar on Friday, because I think that pricing is going to be a really big issue for us to get our heads around. So thank you again. Thank you, Paul and Katie. Hope it's been useful, and we look forward to seeing you all again soon. Thanks so much, everybody. Take care.
Take care, everyone. Thank you. Bye-bye.